Okay, good morning everyone and welcome to today's webinar. This morning you will hear from a number of industry specialists who have a vast amount of experience in cybersecurity and cyber insurance. There will be an opportunity at the end to ask any questions. And if you do have a question today, can we ask that you put it into the chat and then I will pass it on to our speakers at the end of the webinar. So first of all, we have Darren Chapman from CyberScale. Darren is the founder and principal consultant of CyberScale, and he has over 20 years experience within IT and security. Then we have Tom Jolly from Sirelark Risk Services. Tom has 20 years experience within the general insurance sector. And thirdly, we have with us a specialist guest speaker, Matthew Norris from the Beazley Group. And Matthew is an underwriter at Beazley, and he has over 30 years experience within the insurance sector. So without further ado, I will pass it over to Darren and he will take it from there.
Thanks, Jane. Good morning, everybody. Thank you for joining us on this very windy morning, certainly if you're in our neck of the woods in Norfolk. Delighted to be joined by Tom and Matthew this morning to talk about cyber insurance. And I want to just sort of set the scene a little bit, and then I'll pass over to the experts. So I wanted to just start off with a little definition of cybersecurity because it's not always clear. So, and you will get different definitions from different people, and some people will get very kind of very upset if you describe cybersecurity when it should be information security or something like that. But actually, it's really all about managing your risk, mainly to data nowadays. Certainly to systems, but you know, when you're protecting systems, it's really about protecting the data within them. That's what you're really concerned about. So I quite like this definition that we've got up. Cybersecurity refers to the body of technologies, processes, and practices designed to protect networks, devices, programs, and data from attack, damage, or unauthorized access. And cybersecurity may also be referred to as information technology security or information security. So data is one key thing I wanted to just pick out in there. The other thing that I wanted to just pick out in there as well is this first piece here where it says body of technologies, processes and practices. So we have when we talk to organisations, that some of the presentations we do this thing called myths, misconceptions and mistakes. And this is things that we commonly see, particularly in the SME side of businesses. So there's a few things there about, you know, being too small to be a target, and my data being safe is in the cloud, and there's a lot of cloud adoption, and there's, you know, lots of assumptions about how much security that gives you. But the one that I really wanted to pick out, or the two that I really wanted to pick out, is cybersecurity being the responsibility of your IT department or your IT provider if you're outsourcing your IT. And that kind of brings on a reliance on technical solutions. And I think, you know, certainly larger businesses and a lot of smaller businesses nowadays are very much kind of coming to the realization that this cyber risk isn't just a technical risk. It's actually a business risk, and it should be treated like other risks that you manage within your business. I think if you're still kind of focusing very much on it being an IT risk and focusing very much on sort of chasing technical solutions to that problem, and not enough on other aspects such as people and process, then perhaps you haven't quite defined the problem to enough of an extent. And that's where we kind of work with a lot of businesses. So we're looking at a cybersecurity strategy because that's what it really needs. You need a strategy to be really effective around security, and that encompasses a whole bunch of things. And the starting point of that is really defining what the problem is. And when I talk about defining the problem, there's certainly common threats, right? There's things like ransomware, there's things like business email compromise that you hear a lot about, you might have experienced, you might have other business colleagues who have experienced them. And they are very common, and they are kind of common to all businesses. But the important thing is that you understand when you're putting together a cybersecurity strategy, what they actually mean to your business. And that means understanding what you have, mainly data, and its value to your business, and what the threats to it are, and the impacts upon your business if they are compromised. So in security, we talk about compromise of three things: confidentiality, integrity, and availability. And a compromise of any one of those things can have a detrimental effect on your business. What's the effect on your clients and your business if their data is made available publicly? Or what's the effect if you don't have access to their data when you need it to be able to provide services to them? So that's really, that's how we define the problem. The problem has to be relevant to your particular business, taking into account those different threats. Then we look at what you're doing now to protect against those. And that involves those three things. It involves processes, people, and technology. And as I say, a lot of businesses are still just focusing on the technology piece. So then you look to find the gaps, and then you make a plan to address them. And when you make that plan to address them, it should be based on risk. So as we talked about earlier on, you discover what you have, you discover what the threats are to them, and understand what the impact is to your business. And depending on what data it is or what systems they are, the impact might be greater or less. So when you're making decisions about what to put into your strategy, it should be based on risk so that you understand which areas to invest more in and which areas to maybe not be so concerned about. And when you're managing that risk, there's lots of different ways of doing that. The first thing normally you would look at is removing or reducing risks that are too much for your business to stand. So that would be where you would put in your technical controls, you would put in your processes, like starters and levers movers processes, for instance, that make sure that only the right people have access to data when they should have, and that's removed when they leave the company. Then you might accept some risks. So every company will have a risk tolerance level, and if the risk is kind of acceptable from a business point of view, once you've been through that process, then you can maybe accept that risk and obviously document the fact that you've done that. And then one of the sort of last things that normally that you would do with risk is maybe transfer some of that risk, and that's where the insurance side of it comes in. And for us, it's a key part of a cybersecurity strategy, and that's why I'm so delighted to have Tom and Matthew on to talk about that this morning. So again, with no further ado, I'll hand over to Tom, who can give you some more detail on this on the insurance side.
Lovely, thank you very much indeed, Darren. So I'm going to talk a little bit about cyber risk and insurance exposure to organisations, illustrating the issues using data collected by the government during 2019. And while it's a little dated, I think we can safely assume that the warning within the numbers is still very relevant, and perhaps even more so now with so many people working from home during the pandemic. Workplace technology, of course, continues to expand and evolve. Indeed, most businesses and charities now depend on at least one type of digital service to conduct key operations, whether it's an online bank account, email, social media, e-commerce, electronic data storage. And while such services can provide a wide range of benefits, the risks, of course, that come with technology are significant. So, for example, in 2019, 46% of businesses and 26% of charities experienced a data breach or a cyber attack. And as the graphics illustrate, and Darren's already touched on this, many organisations were not adequately prepared. And breaking those stats down further, 23% of businesses experienced just one breach, and 53% experienced a breach at least once a month. For charities, it was 30% and 39% respectively. And indeed, a staggering 9% of businesses and 6% of charities experience breaches several times a day. Shocking if you think about the amount of time that takes up dealing with things like that. The most disruptive breaches were fraudulent emails, as you might expect, impersonation and viruses, spyware and malware. This graphic is particularly telling as it clearly shows that most cyber events had some form of human contributory negligence involved. The consequences of these attacks can be severe, as Darren's already touched on. Loss of data, stolen data, business interruption, costly non-compliance fines under the General Data Protection Regulations, GDPR, which is going to continue despite our exit from the EU, and of course reputational damage, which often accompanies a data breach. Advanced hacking software and crafty scamming techniques are responsible for a startling number of data breaches within the UK. Among the organisations that experienced a cyber attack in 2019, for example, 86% reported falling victim to a phishing attack, 26% were impersonated by a cyber criminal, and 19% dealt with a malware incident, including ransomware. Now, what happens when an organisation suffers a breach? Clearly, there's a time element to consider, and it can be significant for many organisations. The majority are quite lucky and don't spend any time at all on a breach. 17% of businesses and 20% of charities spend up to 24 hours dealing with it, while 7% of businesses and 9% of charities spend between 1 and 7 days recovering from a breach. It's 1 and 7 days where potentially your business cannot operate and you're focusing on something else. And of course, in addition to the time cost, there is a financial cost to consider. As you can see from the graphic, on average, businesses across the UK suffered losses of around £3,200. Small businesses in particular, £3,100. Medium and large businesses, £5,200, and charities, approximately £1,500. Now, that doesn't sound a lot, but remember, these are average numbers. Despite the risk, the preparedness of organisations is still pretty patchy. Just over a year ago, 70% of businesses and 75% of charities had at least some degree of cyber incident response in place, including attempts to identify the source of the incident, assigning roles and responsibilities to individuals, and assessing the scale and the impact of the incident. However, this is the worrying thing, less than a quarter of those organisations actually utilised their procedures, and only 38% of businesses and 42% of charities reported their most disruptive breach to at least one external body other than their cyber security provider. And less than half formally logged cyber incidents. Fortunately, though, many organisations are taking steps to prevent the growing risk of cyber attacks and wreaking havoc. In fact, approximately 80% of businesses and 74% of charities rate cyber security as a high priority in their organisation. Such a statistic emphasises the great importance of taking part in this rising effort to combat cybercrime. So that's me done. Thank you very much. If you've got any questions, just to repeat, put them in the chat box. I'll now pass over, I think, to Matthew, who's going to talk a little bit about what he does on the insurance side.
Matthew, you need to unmute yourself.
Thank you. Sorry about that glitch. It wouldn't be right for any of these webinars to work without someone like me messing up the unmute button. Thanks, Jane, especially. So yeah, as Darren was saying, yeah, there are loads of choices about how you deal with cyber, but for most companies, they won't be able to afford to do everything themselves, and they won't be able to accept all the remaining risks. So one of the options is to contemplate what insurance can do. So if you imagined that you had a cyber incident, this is a way of trying to understand what a process might look like. So we call cyber products rather than cyber insurance, because it's a really big mixture of services and resources, as well as cutting a check and paying money. So it starts with a helpline, and that can be really critical. Cyber incidents are not always apparent. There are loads of reasons why you might have suspicions about there being a cyber incident. And one of the easiest traps to fall into with most technology problems is that you think, okay, if I keep my head down, then it might sort itself out. So if you pick up the phone and you start speaking to an expert, then they'll be able to give you, from their wealth of experience, some idea about whether that suspicious activity is actually malicious activity. And there's a world of difference between that. So it could be that BT or your internet service provider is having a few glitches at the moment. Could be that there's something going on in your back office, or it could be the first sign that something bad is happening to you. And so a helpline is great, because if you phone up the helpline, there's no excess, no forms to fill in. You're not expected to know what's happening. If you phone them up nice and early, then you can get two good results. You can either be told, look, it's not something to worry about. You can put your mind at rest. It may be, for example, that you sent a virus to your clients, but there are some viruses which are much more harmful than others. And so you can actually have, good news. Don't worry about it. Concentrate on your day job. It's not as serious as you were worried about. But every now and again, when the helpline is rung up, it's the first early sign, it's the first symptom, as it were, of something much more serious going on. So you get through to someone who is a breach manager. That's their only job. Most of them are not insurance background at all. They've just dealt with tens of thousands of incidents, and that relative scale and experience can become really useful to you. Their first decision is, for example, should this sort of set of circumstances deserve more investigation? So Tower 1, that pink column, is investigation. There's a lot that goes into the investigation stage, but one of the really key people is a forensic investigator. So they're the data guys. They're the guys that look at all that data and try to sift through it and work out what looks suspicious and what could actually be malicious. Now, the thing about them is that they're highly skilled. And so, unfortunately, their number has not increased at the same rate that cyber incidents have increased. So there's a shortage of supply of this forensic investigation skills. And in fact, the NHS Digital and also the UK Police have gone into print recently, highlighting that there just aren't enough of these guys around. So unfortunately, if you're in the middle of a breach and you try to get someone to forensically investigate and you've not made sort of provision beforehand, then it's very likely you'll struggle to get your hands on someone. And you can see immediately, if you don't know what's going on, if someone can't tell you what's going on, it's going to be very, very difficult to better respond effectively and efficiently to the problem. The other thing, of course, about if they're not very available is it's supply and demand. So they're pretty expensive. So our rough rule of thumb is if we need to get a forensic investigator out of bed, as it were, it's going to cost us about £5,000. And so you can see immediately that if you start investigating, even if you can get your hands on someone, then the bill is going to start getting quite big. And again, if an investigation might take 2 or 3 days, or maybe 4 or 5 days, then the range of the cost there is going to be £10,000 to £20,000. So forensics, if you need to deploy them to be sure that you haven't got malicious activity, is going to be an expensive bill. And one of the best things about buying some kind of cyber insurance product is that you can get access to that forensic skill, which is so critical. At the end of the forensic investigation, it may well be that there's good news, that there isn't malicious activity, or that it's contained or containable. But sometimes you find out that there's been a data breach. And these days, there's a responsibility on those that have had a data breach to let the people know who's been affected. So this Tower 2 is all about notification, and it comes through in 4 different stages. You get help because you might not have the contact information to let the people know, or it might be scattered around your network. So that needs consolidation or purchase. The second stage is getting a good but friendly letter out to let people know what's going on. There's an art of being engaging and caring in that letter, as well as being technical and legal. We don't want your phones to be ringing off the hook because of all these people that want to know what happened to my data. So we can set up a separate call center to make sure that your phones are left free to do your day-to-day business. And then finally, there are these things called fraud alerts. And this is quite helpful because it's quite engaging with the people that are affected. You're basically saying to them, look, I'll put an arm around you and try to help you understand what's happening to you. And so, for example, we had an example where we think that someone's data was stolen during the British Airways data breach. And it was used to open up 2 gambling accounts in someone's name. Well, the fraud alert said, look, hey, did you really mean to open up these gambling accounts? And it allowed them to shut the gambling accounts down before they started using the person's money. So that can give an element of control back to the people that are affected, rather than it feeling as if everything's happening to me. I can't control it. And it's only at this stage, Tower 3, where we start talking about the insurance. And the insurance really falls into 2 buckets. One is a liability policy. So people might be upset with you, your customers. If you lose data, it may include your employee data as well. They may be upset with you. Regulators may be upset with you. Unfortunately, it is regulators with an S. It may be that you lose different types of data, like payment card data, where the FSA may be involved, as well as the ICO. But also, if you lose data of people from different countries, then it's very easy to get regulators from different countries involved as well. It's important when you contemplate that, how you would handle it yourself, because lawyers might have experience and also relationships with the regulators that can keep them away from your business, and you can concentrate on your business. If you're really unlucky, you lose payment card data. PCI, the payment card industry, is kind of Visa and MasterCard in disguise, really. That they have rights if you lose payment card data. You know, they're big companies, and it's definitely something that you would appreciate experience of someone else to handle their approaches to you. And you don't want to lose the ability to use payment card data. So that's the one bucket, the upset bucket, the liability bucket. The second one is the first party coverage. This sounds more like traditional insurance, but for the cyber world. So your data will be in worse shape at the end of a cyber incident than it was at the start. So we can help you reconstitute and recover that data. You'll probably lose some revenue potentially during the incident, and there's a business interruption policy. And then the final part is something called cyber extortion. So there's a particular attack, and if you haven't heard about it, it's definitely worth dwelling on it a little bit more, called ransomware. It's a virus which basically prevents you from getting access to your data on your own computer system, which could sort of really stall your company. And what they say is, we'll give you access back, but pay us some money. So there's a ransom or an extortion. You know, that there are definitely better ways, as we've all been talking about recently, than paying the ransom. That there are ways of trying to avoid doing that, because you don't want to cave into people that are threatening you. But to the extent that that's the best way of treating the incident, then there's payments under the insurance too. So this is the process which I've just talked about, and we'll leave you the slides and allow you to understand that afterwards. And these are the covers in a little bit more detail, again, for your reference in the future. So these services, we think this product is an awful lot about services. How do they bring benefits to you? Well, I suppose I start by saying that, you know, cyber is a fast-moving area. You know, even ransomware, for example, has changed materially in the last few months. So basically, what happens is someone attacks, the defenses go up, and then someone attacks again, and the defenses go up again. So the ability to better access experienced specialists that kind of know what's going on before it's happened to you can really make the ability to respond far more efficient and quick. So there's a real benefit to experience in cyber. Cyber changes. No one knows exactly what happens tomorrow with cyber. It's a fast-moving area, so that experience can help apply and help you about the problems that you have not experienced yourself. As I said, you can put your mind at rest as well. So sometimes it's possible to worry about things that you don't need to worry about. Overall, it's all about trying to make sure that everyone does what they're good at. And it may be that you're very good at dealing with cyber incidents. For many companies, it's not their main job, and there's no reason why they should know about cyber incidents. They shouldn't invest all that time because it would distract from their business. And so, you know, it's a good opportunity to be able to pass it to someone and for you to concentrate on your day job. There is a really clear sign that a good response can shorten the period that you're affected, and that may reduce the amount of costs, but it may reduce the consequences of a cyber incident as well. The ability to better communicate to regulatory bodies is absolutely key. That regulators have become much more interested in cyber issues, and they realize that it can be really significant to the wider business community, and so they're much more likely to get involved. If you can communicate frequently, well, and expertly, convince them that you've got things under control, it's very unlikely that they'll try to interfere with your business. Of course, we want to try to lessen the consequences of you losing business, and if we keep your customers more happy with good communications, it will lessen the impact on your reputation. A couple of things about cyber wordings. One is, you know, a lot of outsourcers are used for small businesses, and they can cause cyber problems. And so it's really important, if you've chosen to use an outsourcer, which can bring brilliant benefits to your business, that if the outsourcer causes the problem, that the insurance cover responds. There's something that used to be called wild viruses. They're kind of viruses that affect loads and loads of people. They spread quickly, and that can mean lots of companies are affected at the same time. And so sometimes those can be excluded from insurance coverage, but that's what could be most likely to happen to you. So it's important that you realize there's that coverage in your policy. And then finally, warranties to do risk management. So, you know, risk management is key part, as Darren has already said, in making sure that you kind of prevent or try to lessen the impact of what's happened to you. So risk management is key, but you've just got to be aware of what risk management requirements there are under your insurance policy to make sure they match what you do and what you feel comfortable doing. Because if there's a mismatch there, then when it comes to the claim, then, you know, it might not be as covered as you would wish it to be. So the service revolving around Tower 1 and Tower 2, what I'd probably say is there are three key elements to highlight here. One is, if you're unlucky enough to have a payment card industry problem, so if you lose payment card data, it's not likely, but it's the biggest severity that you could possibly suffer, probably. So if your insurer has experience of dealing with Visa and MasterCard, that could become very, very valuable to you. When there is a cyber incident, there are normally a variety of different vendors that need to work together closely to be effective. So knowing that your cyber team under your insurance policy has worked together well together before means that you'll get an efficient response. And then the other thing I'll pick out is ransomware. So ransomware is the biggest issue for us right now. It's is increased rapidly, and it's got more complex and more worrying. So if you want to work out what's likely to happen to you, then you want to know that your insurer has lots of experience in dealing with ransomware so that it can be an effective partner to help you. Last slide for me. There's something called GDPR. It's European regulation. Essentially what it says is you need to give chapter and verse to your regulator within 3 days of being aware. So 72 hours, 3 days, that's a tight timeline to give this level of information. And so it's really important that either you comply with it, or that if it exceeds 72 hours, you start reporting to the regulator on a daily basis and update to convince them that you've got it under control. So the easiest way for most companies to comply with this is to use insurance, because most insurers that have established cyber players have been operating to 72 hours for over 10 years, because actually that 72 hours stipulation for the UK and Europe has been borrowed from Visa and MasterCard, from California, from Australia, loads of other situations. So you really want to know that your cyber insurer is international, so they've been dealing with incidents within 72 hours for a long period of time. And if you deal with it within 72 hours with an insurer's help, then that will make sure that they don't interfere with your business too much. I'll pass back to Darren.
Thanks, Matthew. Yeah, really great insight into the value of cyber insurance, and it very much fits into what we see and how we see it. I talked a lot earlier on about strategy. I talked a fair bit about sort of preventative strategy, but one of the first things that we typically look at when we're talking to organisations and engaging with them for the first time is actually the incident response side, because as much preventative work you do, there'll always be some level of exposure, there'll always be some level of risk. Even when you've put all of your preventative measures in place, chances are something's going to happen at some point. Whilst you're working on putting those preventative measures into place, you've obviously got more exposure at the start of that process. So that incident response side is something that, and the kind of business continuity side of it is something we look at very early. And the real value of the insurance for us and our clients is yes, obviously you've got the financial aspect and the sort of ability to claim back on some of the costs that you might incur directly, and loss of revenue or loss of kind of operational time, but having that quick access to those experts that typically in a medium size, anything smaller than a larger enterprise business, you just don't have. So forensics, as Matthew said, is a very kind of specialized area of security, which is very expensive, and if you need to do that, if you need to engage that, you need to not only be able to pay for it, but even be able to find someone and quickly, and have someone who's available, and lots of different sort of investigative aspects. Also things like PR. A lot of small, medium-sized companies don't have anybody on the sort of PR side. They don't have anybody on sort of retainer for that, even if they're outsourcing it. And so again, having access to people who can help you manage the communication around an incident, particularly if it's something that's high profile, is really key to how you respond to an incident and how well you come out of it. So those are really the key areas for us. I think the other thing I'll just kind of say in closing from my side, and I know Matthew and Tom will back me up on this, is that insurance is definitely a key part of the strategy, but it is in no way a get out of jail free card. There are a lot of things that you need to be, ultimately as a business owner or a senior leader in a business, you are responsible for the security of the data that you hold, particularly your client data. So you can't kind of, you can transfer some of that risk, but there's a lot that you have to do in advance. And as Matthew said as well, a lot of the insurance policies will have a sort of a minimum level of expectation on what you do around risk management and around security that you will have to have in place for your insurance policy to be valid. So that's I think all I wanted to close with. I don't know if Matthew or Tom have got anything else that you want to add before we perhaps go to questions.
Yeah, just one thing actually, Darren, just to follow on from your point, your last point there. It's something perhaps a lot of people don't know, but within law there is a requirement for you to behave as if you were uninsured, even if you do buy an insurance policy. There is an onerous duty on everyone who buys an insurance policy to make sure they've got the right systems in place. And the question then is like, well, what do I need to do? Well, clearly there's going to be some terms and conditions in each insurance policy. There's probably also going to be some pointing towards government minimum requirements that are, you can find on the internet. And clearly, if you want to speak to someone, then pick up the phone to someone like Darren, or just Darren, as it case may be, and he will guide you. He will take your hand and guide you through the process. There you go.
Thanks, Tom. Matthew, anything you want to add before we get to questions?
Yeah, I guess I would highlight your point, Darren, that I think there are lots of misconceptions and that people might not bother with me. A lot of attacks are not targeted. It's more like spam, where viruses are sent out en masse. They don't even know. It's often a row of numbers that the people that they send the viruses out to are just a row of numbers. They don't even know who they are, what they are, where they are, how big they are. We've had 3-man iron foundries in the middle of Lancashire attacked. That there was no way that that sophisticated virus was targeted for that particular company. It was a complete mismatch. And so, I think we've just got to realize that there is inevitably going to be cyber activity, and risk management is a little bit like, can you imagine having an office, living in an office without a smoke alarm or something like that? There's just this, we're at a very early stage of evolution where we don't have minimum standards. There aren't really normal behaviors about cyber. But they're absolutely necessary, because it's going to be a very big problem for many companies if they haven't done anything. It's not about doing everything. It's about starting to do something to discourage people from paying you attention. And if you do a little, it might make a big difference to what happens to you.
Absolutely agree with that, Matthew. And those smaller ones that you talked about, so much of that is automated, and so it allows cyber criminals to do that at scale. And then that's kind of a first port of call. And then obviously once they've found a way into somewhere, then actually let's sit up and take notice and see what they can then get out of that. So great, thank you very much. So thanks, Tom. Thanks, Matthew. Jane, have we got questions?
Yeah, I'm just seeing what questions we've got through. We had a few come through before the meeting, so I'll start with those ones. People sent over by email. If I have Cyber Essentials or ISO 27001, would that reduce my premiums?
Yeah, sure. So maybe I can go first on this one. If you're there's two ways that we kind of underwrite risk. One is as a portfolio, as a volume of risks, so that the process is nice and quick and you can get quotes and you can buy and cover nice and quickly. And then for bigger risks, we kind of look at the individual details, because there's a bigger premium and there's more time to analyze the risk. But also the exposure is bigger on those larger risks. So for those larger risks, it almost becomes a need to be well risk managed, because the exposures are higher. If the exposures are higher with no risk management, then it becomes an uneven equation for the insurers. So it will probably be, depending on exactly what you do, more of a requirement that it shows you've got good risk management. So it may save time rather than answering lots of questions, but it's kind of qualifying a risk. For a smaller risk, up until recently, there would have been a much simpler question set to try to work out whether you're a right risk to get insurance. But unfortunately, with ransomware in particular now, some of these requirements, even for smaller risks, are crucial just to get insurance now. There's a big change, really, because of ransomware in particular, that if you haven't done certain things, for example, offline backups or segmented backups or something like that, then it may be that you might struggle to get the insurance. So you'll be a better risk, which will benefit you, and it might get you the insurance. And if you're a bigger risk and you've gone above the average, then it may well result in a discount. But it's about qualifying for insurance these days.
Just add something very quickly to that, Matthew, as well, on those sort of frameworks. Very similar to what you're seeing in terms of it being a requirement. The other area that a lot of companies now starting to see that as a requirement is in supplier due diligence. So the bigger companies, particularly if you're doing business with a bank, for instance, and trying to supply products or services to them, they're asking similar sorts of questions, and they're asking for those frameworks as well, particularly 27001. Cyber Essentials is more for kind of government, local government contracts and things like that. But the bigger companies are more asking for things like 27001. So actually, if you are looking at those frameworks, to some extent, you can see them as an investment, because they will be things that might help you get insurance, they might help you get contracts that you might not otherwise be able to bid for. But certainly, again, frameworks aren't the be all and end all, and compliance isn't the same as security, right? The two things aren't. So be careful about.
I've also heard insurance being a requirement as well, particularly with overseas organisations. One particular client of mine does some work with the universities in Israel, and they demand that he has cyber insurance, not just protocols in place.
Yeah, that's increasingly true. And talking of suppliers, looking in the opposite direction, if you outsource, it's your right to ask the same question of your outsourcers. Ask them whether they've got a certificate. You don't have to ask them 26 questions, but say, do you have a certification? So then you can manage your relationship with your outsourcer in the same way.
You're on mute, Shane.
There we go, that's better. Okay, so we do have another question for you, Matthew. Someone has asked here, do you stipulate what should be put in place, technical and organisational measures, in order for a payout to be likely?
Yeah, so there are two stages where there may be technical requirements. One may be to get the insurance in the first place, and so there may be a proposal form, a question set, maybe sometimes some sort of external scan or something. And then there's the second thing, where when it comes to a payment, whether or not you have to qualify for the payment. So there's two stages: at the start when you're buying, and at the end when we're paying. And the paying bit, we often call them warranties. Just like you'd have a warranty on your house to have that smoke alarm or those locks or something like that. So we don't. We ask questions up front, and we ask whether or not you've got processes as well as what you do right now today. But under our policy, there aren't warranties which kind of you have to jump through to make payments. But it is an important part. I would say if the warranty under an insurance policy is a reasonable one, as in that you do backups. I mean, I wouldn't feel uncomfortable if I was buying a policy it's almost like a reminder that backups are really important. And, if you don't do any backups, then it'll probably serve against your own interests. But it is definitely worth paying attention to those warranties to make sure that you think that they're reasonable and that you're able to comply with them.
Okay, thank you. We do have another question here. What is cybercrime cover compared to traditional crime cover?
Sorry, I seem to be hogging it, but I think that one might be mine too. Cybercrime covers a variety of scenarios, but probably the main scenario that we see is it's basically a spoof invoice. So someone who you think you owe money to will contact you, and two scenarios. One is they've got into the email account of who is supposed to be paid, and they're pretending to be them, but they've got control of their email. So they'll send you an email, please pay me this invoice, it's overdue, hope you had a good weekend, and then you can pay it. Or it could be a spoof email, so that it kind of looks like it came from the right people, but essentially you're duped. You in good faith pay that invoice, but actually someone is giving you the wrong bank account details and it whizzes off to the wrong account. And so the thing about cybercrime is the way that an insurer should respond to that is, for example, they need to investigate whether it came from a true email account or a spoof email account. So that might involve forensic investigation, for example. So you can see immediately the services that we've all been talking about correspond to the cover called cybercrime. Whereas traditional crime cover might be an employee who's been siphoning off money from the accounts. There's not a lot about the services under a cyber policy, or that Darren can offer, or that Tom can put you in touch with, that can help you with that. So traditional crime, often doesn't involve those kind of cyber services to kind of investigate what actually went wrong, and it's really an awful lot of cyber crime is spoofed invoices.
Yeah.
Okay. Yeah, we have another question come in now in the chat. Will a cyber insurance policy pay out for ransomware if the customer has no backup or didn't configure it properly, or will it be denied?
I'm sure Darren has lots to say about backup and the issues of backup. One level is it depends on those warranties. So you've got to look at your policy to see whether there are warranties about backups. Warranties come in loads of shapes and sizes. Some say some backup, some say successfully tested and recovered backup. Some just say a contract to be able to do backup. But I'd just say that it varies a lot with backup, but our policy doesn't have a requirement for backup, but I think it's really critical, especially with ransomware, that you satisfy yourself you've got adequate backup, in particular segmented or offline backup.
Yeah, I think for me, a lot of this comes back to the whole thing of look at all of this in the round rather than looking at specific things, right? So rather than thinking, okay, what do I need to do with my backups to make sure that my insurance policy will pay out if I need it to? Actually, it's much more fundamental than that, right? And where you want to be is ultimately the insurance should be there as insurance, exactly that, right? It's not what you want to use. You don't want to have to use it. So the backups actually should be, if they're fit for purpose, they should be a way of you never having to use your insurance policy. And I think looking at it from that perspective is a more healthy way from a business point of view for looking at it.
Yeah, and backups have different connotations nowadays. Obviously, in the old days, it was sticking it onto a reel of magnetic tape and someone taking it home for the night. But nowadays, You have, I imagine, you've got your Amazon account, and perhaps even you've got another account with Google or whatever it might be, all stored on the cloud. And so you've got to sort of backup, if you like, and it doesn't cost as much as it used to. So why wouldn't you?
Yeah, I think the thing to be aware of with that, Tom, like Rob was saying on the chat, is there's a lot of assumption, right? That if you've got data in the cloud, then it's all being backed up for you, and quite often that's not the case. You need to have more than one. You need to test them. You need to test the restores. You need to know how long they're going to take. All of these things. A lot of it comes to process. Again, it's yes, you might technically have a backup, but actually, if you need to use it and you need to restore the data, how long is that going to take you? And is it going to be quick enough from a business point of view, or do you need to do something differently? So again, looking at it in advance and looking at those different scenarios. When Matthew and I and Tom were talking before the call, and we were talking about incident response, it's very similar, right? The time to make decisions and time to think about these things is not when you have an incident. It's not when you need to use your backup. It's way in advance of that. And then when it comes to it, you know what you need to do, you know how long it's going to take, you know what the process is, and you're not trying to make really critical decisions on the fly when you're in a kind of panic critical situation.
Cool, thank you.
Okay, do we have time for one last question?
I think Rebecca's question looks really interesting, actually.
Yeah. Okay, Rebecca wants to know, you can't help feeling those that know what they're doing will be paying over the odds for their cover to subsidise those that don't, because the fact find to establish behaviours is so painfully complex. Any thoughts on this, as this would deter me from seeking cover? Anyone?
I think, I think it's true to say that overall, cyber insurance is a relatively new product, and the pricing is not stable. Everyone's learning about new exposures, so I think it is, and there are different approaches. So I think clearly, if you think that you've got above average security, then the more questions people ask will probably be better, because you can represent that your risk is better than average, and so that will be a way of trying to make sure that your improved risk management is sort of recognized in the limits that are available to you, the coverage, and also the premium. So I think that increasingly people will be able to automate assessments, and that will probably enable better risk management postures to kind of be more readily recognized.
And I think it's fair to say, Matthew, if on that side of the question, those that know what they're doing, or more competent than those that don't, then it's going to be reflected in the risk transfer price at the end of the day. So it really does come down to, you're buying an insurance policy, for example, to deal with that once in a 25-year catastrophic event, which is essentially what a lot of insurance is about. But it shouldn't put you off. You shouldn't. I think it's a fallacy to think that, okay, I know what I'm doing, therefore I don't need to have that fail-safe cover. I mean, and indeed, some of your biggest clients are some of the biggest companies in the UK, Matthew. So, and if they're spending millions and millions and millions of pounds on IT expertise in-house and outside, and yet they still deem it necessary to buy the cover.
It's absolutely true. I mean, Twitter recently, who's probably spends enough on IT to be like the gross domestic product of a small country. Their whole security was undermined by a phishing email, which meant that ex-presidents were apparently asking for bitcoins, and so I think the true value of risk management is to you, and you wouldn't want to dilute your own risk management. With conception that it's possible you don't get the best insurance premium. I can guarantee you any loss that you avoid would far outweigh any savings on insurance premium.
Totally agree. Thank you. Good.
Yeah, we'll probably to wrap it up now. What we will do, there's some contact details on the screen now for you if you want to follow up with anyone personally. We'd all like to thank you for joining us today for today's meeting webinar. And what we will do is we will make sure everyone gets a copy of the slides within the next 24 hours once we've finished the meeting. Okay, so thank you again for joining. Thank you to our speakers, and we hope you enjoy the rest of your day.
Thanks, Jane. Thanks, Tom. Thanks, Matthew. And thanks, everyone, for joining us. Really appreciate it. Thanks very much.